Ladies and gentlemen, Greg Michalowski from ForexLive.com. Today's date is November 6, 2023. I'm going to kickstart your trading day, your trading week in the New York session with a look at the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar after last week's dollar sell-off. All right, looking at the euro versus US dollar, I'm looking at the 4-hour chart here. And if you recall from last week, the 106.10 area, actually this area between 1.0608 and 1.0616 is at home to a number of different swing lows and swing highs going back in time. Just believe me, and you can see it yourself there. Anyway, the that level 106.10 that had significance going back to the daily chart. Why? Because the move up from the September low to the July high, the 38.2, came in at 1.06106, and we sort of based against that area, and or we did right here. And then rotate to the upside. Of course, we had the unemployment report on Friday, which kicked the pair sharply to the upside. And as you can see, we're getting out of the ranges that have been defining the currency pair for quite some time now. This is, again, is a 4-hour chart. So each of these dotted lines represent weeks of trading. So a number of weeks going back in time here. Broke above the 106.94 level on Friday, and what was important is that we came back down and we retested that 106.94 level after the initial move to the upside, held support against that level and moved higher. And this week we are continuing that move to the upside. Now we are getting into resistance against another Fibonacci retracement level. That's a 38.2% retracement. This time the move down from the July high to the low price that we saw in the month of October. That 38.2 comes in at 1.07637. It is also home to other highs that going back in time to the month of September here. I'm speaking of these highs right through here, a number of different highs forming that ceiling before moving to the downside. It also is home to some lows going back here to the month of August and early September, I guess, where the market also found some support. Buyers near that 106.76 level. So that's going to be a next key target up there at the 107.63 level. Our high price in trading here today so far has reached 1.0655. So got within about 8 or 9 pips of that 38.2, that low swing area. Before finding some sellers. We are currently trading at 107.38, which is just above the 36 level, which corresponds with this high going back to the month of September before the market moved to the downside. So watching this level in the short term at 107.36 for support. If we move below that level, we could see further rotation back to the downside as the market battles between this key resistance up here and short-term close support at the 107.36 level. We'll see how that all pans out. Looking at the 5-minute chart just for giggles here, what we see here is that the price is testing the 100 and 200 bar moving averages. That's somewhat key. As you can see in the short term that traders sometimes pay attention to these sort of things when we have a battle going on between support and resistance. But earlier today, the market held the near the 100 and 200 bar moving average, and here we are trying to do the same thing again. So 36 level is probably a key barometer in trading here today in the short term. So watch that level. If we move below it, we could see rotation more to the downside. I guess the close price from Friday's trade was somewhere around this area right through here, around the 22 level. So get below that level, it opens the door for further downside. Is also near the lows for the trading here today. So watch that level on a break of the 36 type area for another support target on the downside. Let's take a look at the dollar versus yen next, and we will look at the 1-hour chart here. And what we saw in trading last week was that the market got really brave above the 150 level. The price surged to the upside here, and the Bank of Japan meeting came and went without them doing much to dissuade the sellers in the yen, and this was before the jobs report. And then on Friday, though, things started to unravel to the downside here after the U.S. jobs report, and moved further to the downside. Of course, we had moved down earlier in the week, moving down to the 200-hour moving average. We did move below the 200-hour moving average during Wednesday's trade, but quickly rotated back to the upside. And on Thursday's trade. On Friday, we did try to hold that 200-hour moving average before the jobs report, but it was the jobs report that pushed the price further to the downside and rotating all the way down to the 149.18 level. And trading here today, we are seeing a little bit of a rebound to the upside and currently trading near the highs for this currency pair. What do I see here? This area right through here between 149.27 and 31, although we broke through it on Friday, we started to reestablish some support against it toward the close. And in trading here today, the move down to the low during the London morning session couldn't approach that area. We need to get below that level to increase the bearish bias and continue move down toward our lows prices, really from last week's trading as well of 148.79. So that is what's needed on the downside. On the top side, let's see, this 61.8% retracement at 149.90 is a key level, and then we get to the 150 level. Once again, on the top side, that level corresponded roughly with these highs going back in time. Through here, it came up just short of that, around the 98 level. You can see that the sellers were leaning against that 150 level here, keeping the lid on it, and then moved above it. And for the most part, has used that level as a barometer for bullish above and bearish below. So we'll be watching that 150 level on a corrective move here. I would expect to see some sellers against that level. It just would make sense from a technical perspective, in which case we'll head back down toward this level. If we get above that level, then the 150.15 level becomes another level, followed by the 200-hour moving average close by 150.18. But any sort of move above the 150 level, you start to question the selling momentum in the dollar versus yen. So be aware of that level. Once again, it's not a surprise. Finally, let's take a look at the sterling versus US dollar. I'm going to look at the 4-hour chart in this currency pair here. And what we can see is that the price high in trading here today sniffed the 200-day moving average. That 200-day moving average comes in at 124.34. That's the overlay on this 4-hour chart, actually. So be aware of that. But the 124.34 is that 200-day moving average. The high price in trading here today reached up to 124.278. So got within 7 or so pips of that key 200-day moving average. And has rotated back to the downside, currently trading at 123.86. So a successful test of that, got within a reasonable amount before rotating back to the downside. We are looking to test swing levels down here at the 123.68 level. Watch that level as a close support level. It was near the lows during the Asian session and trading here today. A level corresponds with just these levels of going back in time here. This is a 4-hour chart, so this is a weekly time period here. So that level will be a close support. Below that, I'll look for 123.36, which was the high price going back to the early October week, and we rotated above that level in trading on Friday. Closing above that level was a more bullish break outside of this range that we've seen in the sterling versus US dollar, like other currency pairs over the month of October. So there you have it. A look at some of the major currency pairs to kickstart your trading week. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.